Hey everyone, I'm Tim Hamilton with StellarQuest Real Estate, and in this video we're going to be taking a look at the 2026 housing market forecast from the California Association of Realtors. So of course in this forecast they're looking at the entire state of California, and overall I'd say their forecast is pretty positive for everyone, whether or not you're thinking about buying, selling, or relocating, moving, buying, or selling your home in order to purchase a larger one, downsizing, upsizing, whatever you're doing. I think the housing market in 2026 is going to be a good market for everyone. And you'll see what I mean by that as we move through the forecast. But in general, they're kind of expecting us to move back towards a more neutral, more balanced housing market where there's going to be more homes on the market. There's going to be more home sales overall. Prices are going to continue to go up slightly, but because mortgage rates are dropping, according to their forecast, affordability will also improve for home buyers. So if you are thinking about buying or selling a home in Southern California, feel free to call, text, or email me anytime. You can find all of my information in the description below, or you can call this phone number up here and get a hold of us that way as well. So let's go ahead and get into it, and I'm going to pull up a chart here. This is kind of their summary chart of their expectations for 2026. And so we're going to start with the total number of closed sales, and they are expecting that to improve slightly from 2025, where they have a projected total sales of 269,000, and this is specifically for single family homes. And so they're expecting that to increase 2% to 274,400. So increasing sales is good. Overall for the housing market, it means more people are able and willing to buy and sell homes, but we're still far below where we were at in 2020 through 2022, back when we had lower mortgage rates. Once rates started going up, that really put a stop to and really slowed down the total number of sales that we've been seeing in the state and really across the country. And then moving on to the median home price of a single family residence, they're expecting that to increase 3.6% to 905,000. And then we can also look at housing affordability, which, as I mentioned before, they are expecting that to improve slightly to 18%. After having a projected 17% affordability for 2025. And housing affordability essentially is the percentage of households who can afford to purchase the median priced home, assuming that they have a 20% down payment. So this is, fairly low. It's very low actually historically, so affordability is at low levels, so any improvement we get from here is a big help for the housing market overall. And then they also just have some general kind of economic forecasts that they put out. They are expecting the state unemployment rate will increase to 5.8% in 2026, which is up slightly from their projected rate of 5.6% in 2025 and their 5.3% number in 2024. And they're also expecting inflation to pick up slightly over the next year. The annual average consumer price index for 2025 they expect will be 2.8%, and then it'll bounce back up to 3% next year. So a slight increase in inflation. And they're expecting the 30-year fixed rate mortgage rate to also drop, this is where the housing affordability is going to improve. It's going to be on the back of mortgage rates dropping rather than prices dropping, according to their forecast here. And they're expecting it to average 6% for 2026. And when it comes to supply, they're expecting active listings will be up nearly 10% as market conditions and the lending environment continue to improve. So as mortgage rates drop, they're expecting that to also increase the number of people who want to sell their home, because really a lot of people, they're locked into an extremely low rate right now, and it's tough to give that up. When you're locked in at near 3% level, if you were to move today, whether you're upsizing, downsizing, relocating, to trade in that 3% rate for a 6.25% rate today will drastically increase your housing expenses. So as rates come down, that will incentivize more people to make a move. And then we're just going to finish with a quote here from Jordan Levine, who is the Senior Vice President and Chief Economist at the California Association of Realtors. And so he says, as economic uncertainty begins to clear up in the next 12 months and mortgage rates start declining more consistently in the upcoming quarters, housing sentiment will see some improvement in 2026. However, mounting headwinds such as the ongoing trade tensions between the United States and its trading partners, the home insurance crisis, and a potential stock market bubble will remain challenges for the housing market in the upcoming year. So, hopefully some of these things, if we get a little bit more certainty, as far as tariffs, what kind of impact that may have on the economy, as well as, what the Federal Reserve is going to do with interest rates. Hopefully some of those things clear up and we can get a little bit of a clearer picture here in the next couple of months. But yeah, overall, this is a very positive forecast, I would say. More homes on the market, affordability improving. Those are things that are positive if you're thinking about buying a home next year. As well as for sellers, we're going to continue to see home prices rise, so they're not expecting a significant drop in home prices. And overall, I think the market, we're just moving back towards a more balanced, normal housing market, which I think overall is very healthy. So again, if you're thinking about buying or selling a home in Southern California, feel free to get in touch with me. More than happy to help you out and answer any questions you have. And if you enjoyed watching this video, I would really appreciate it if you hit the like button and also subscribe if you like to stay up to date on the housing market.